bearish, it could be bumpier because it's not a major blow off high that needs a vicious bear, where it's, you know, big selling and then you had a continuation pattern and then big selling. This would be more moderated selling. There's less scared money and you've had a mini echo bull. You haven't had the full blow off bull. You haven't made a new all-time high. So we were expecting a channel here. Before it even existed, we were expecting it, and we were the first to draw it the minute we had 2 touch points. So, you know, for guys like that, you've got a lot to learn. You've got a lot to learn that you don't know. And I've still got a lot to learn. I don't know it all either, and I'll be inaccurate and accurate regularly. But before you call someone inaccurate in the first hour after watching a YouTube, maybe give it a few moments to see how that candle pans out and it hits the other end of the channel and then forms a shooting star and starts fizzling out. Maybe it's your tweet that, you know, doesn't age as well, not his. Maybe it's your comment that doesn't age as well, not his. Have an idea of understanding the big time frames. And that's, you know, there's a lot that goes on. Look at this volume again. Clearly, volume, capitulation, selling. Then you get the capitulation selling. Then you start to get the build up in the bull market. That's your low, the capitulation selling. You didn't get it here. You didn't get your capitulation selling, but you got the volatility squeeze. That's why we were bear when everyone else. We took 6 digits out of that. And members of our community took it, because it's understanding. Look at this extremity of Bollinger Band high here. The breadth in this intestine that goes right down here. That was your blow off high. That's why we started calling bear long ago. People hated us that joined our community in the boom, and it started going. We're saying it could be a bear, it could be a bear. You know, this you should be shorting. Should be shorting. It was sacrilegious. Sacrilegious for belief system people. Now you got a grind line here. You haven't yet got the full constriction on these Bollinger Bands to be super confident of calling a low. It might not ever come to the extent that it got nice and tight here and nice and tight there. And this was just a continuation, not a bottom, by the way, because this is a bigger cycle. You're now in a mini, smaller version of the big cycle. So things might not be less extreme. The down move is less extreme. That's why you had to sit through such a nasty testing rally spike. Everyone came back and told us what idiots we were there because we'd said 6.8. And there it was. Until, of course, it makes 6.8. But by then they were all buggered off and blocked and they never come back. So good luck. So this is where we are right now. And actually this chart was done while it was still testing. It's now, if I go back to the other jaws, you will see that has fizzled back a little bit. So you get to this point. People say, oh, technical analysis doesn't work. There comes a point technical analysis can work. Good luck, you gave up on the game, mate, and you never really mastered the art. You know, that's my mentality towards you. You've got to have an assessment of the set of skills that's involved. The fundamentals of the chart are the technicals. The technicals are the fundamentals. So whatever moves it is fundamentally relevant and is technically relevant. If you want to hide from the validity of tracking prices as being significant, that's fine. But don't try to convince others that they're wasting their time. I'm doing just fine on technical analysis of the crypto markets. So I'm being a bit belligerent today because, you know, sometimes I think I have to have a different kind of message and a different kind of tone. And there's people that'll never learn, and there are people that do. And the ones that listen will maybe see the stupidity in themselves and others, because I see it in myself. I used to maybe think like that, and I may still on occasion do it, and I want to stamp it out. And I want you guys to hear it and stamp it out. Here's your double cycle of extreme volatility. You never made it to the low side. You never made it to this blue line twice. You had a secondary spike. That is a 2-cycle volatility extremity bull market. And then it took a shakeout for a double dip extremity low before it was properly done. And by the way, that's a small version of a macro upside HVF. Here's your super macro done right there for you. Drawn, that's our scenario, and guess what? It's complying to our scenario. And we had a channel there, and we thought it would be a moderated selling, and at some point we expected to get support, and that support's around about these levels. which is why for now we're cautiously biased bull. But that doesn't mean it doesn't have some chopping and a little bit of testing time, and we need that volatility to come down. Guess what? You had your double dip. You only made half the cycle there, and you only made it half back. So you went from the highs back to the halfway line and back to the highs again. You went from the lows back to the halfway line and back again. So you had a double cycle of low volatility. You can see how small the candles are. And then you got your first, you got an HVF triggering you on your first extreme low volatility. How many guys were you watching on YouTube that gave you that during that period? I don't know. I don't know anybody else who analyzes charts the HVF method way. Then you got very low vol here. Look at these spinning tops. Absolute low volatility. Volatility is the game. Look at the bull cycle in the blue line. Increase of volume. Look at the half cycle in the green lines. In between when you're just going from here to there. There's your green cycle. Once again, you're sort of not quite to the lows and you're back to the midline. Your green cycle. That's your high. High volatility down to the halfway mark and back up again. That's a half cycle. That's your green line. Your full bull was part there and then it reasserted there. So you had a double cycle in terms of the volatility for your bull market up to there. You had a double cycle, double dip for calming period here. And then you had a huge blow off there. First call, you went double. You had your dip to the halfway line. You didn't get shaken out there. You got the big rest of the final blow off of the move because you hadn't yet got the extremity of the volume. That's your blow off volume. That's your blow off bull volume at the first H1 of your HVF. That's your final capitulation low volume on the bear market. That tricked people because it went down to an extreme low. Then it started to pick up. You might have thought it was there. You had your full capitulation low with the price action there. Down in this bear market, final low point, capitulation bump volume between the descending volume and the increasing volume. How many of you are watching and checking for that while writing what butthurt retards the YouTube commentator guys are? I know that's not you guys that are watching this. You're not that type of the audience, but I just think the people want to open their mouth before they've learned anything. You know, here's your third event. Look at that low. Once again, descending volume getting nice extreme low in the bull market. Final capitulation low. Did you short there? Okay, in there. 10 grand's too much to learn how to do this properly, but you make 100 grand in a single trade event. Then you climb up here, bull markets. High volume, but not as extreme as here because it's an echo bull, which is another reason why we said this is not an all-time high move. Everyone else, Bitcoin about to go in its new parabola. All the commentators with hundreds of thousands. I'm so ranty today. I must be that time of the month. Anyway, so that volume not as high, but it's a smaller echo move and a much more stage channel pullback on low volume. Did you get a little stab down in a final capitulation? It won't be on the same scale as this. Won't be on the same scale of that. Could be like this one. All right. It hadn't happened. That's why we said careful about charging in. We don't throw out an opinion without some sense of analysis. The next move, in our view, could be so vast. It could not only double digits, you could get deep approaching triple digits in thousands. So that would be a six-digit number. 6-digit number if you talk about 100,000. Could go deep in towards there. But it could, you know, I'm talking 20s, 30s, 40s, 50s, and if it has an overperformance blow-off that we had of this level, who knows where it could go. So that's a great opportunity. We're looking to acquire it, but you know, we might acquire a bit there, and we'll acquire a bit there on the lower end if it continues to do what we do. And will we get another visit? The volatility is coming down. Will we get another visit to the low extremity, and will it give us a double cycle shakeout? These red areas are the low volatility areas. Bear for volatility. The market went up, but bear for volatility. Are we going to get a bear volatility period that sets up another blow-off volatility period? That's when you make the supernatural gains. You keep showing up and you just want to ask when moon. I say you. I'm not talking to you personally, but those four guys with their kind of mentality and attitude. When moon? Well, you want to know when moon? I'm giving you an idea when you go into your next green phase of extreme volatility. And what pattern will you have? What volume? How big will your volume analysis be in your technical analysis? How big is your volume by price? How big is anything that's worth anything? Are you all sitting there navel gazing, looking at your MACDs and your RSIs and all your little mathematical formula indicators and thinking you've worked it all out? That's where most people are sitting trapped. And I'm here to say, we know we have a reasonable idea of what it is we're looking for and what we're doing, right the way through to even looking at your Powell Ethereum. We don't bother too much with the other coins, but here's how volatility works with Ethereum. Here's your buy marks, and I don't use moving averages, but you can see one just for here. When you had the extreme lows, it's a buy. We traded that HVF on Ethereum. Were you in it? Did you get overperformance of that? That's what you got to ask yourself. If you invested, maybe you might. If you invested in your learning, if you want mastery, decide to become good at something. It's simple. If you want to follow guys that are just going to give you a trade feed or just suppositions or something to keep their tweet followers joining, good luck. Sell here. Extreme low volatility, you're under the moving average, so the trend is bearish. You trade continuation on the extreme low volatility, a sell-off. You go low. This was the Bitcoin 6,000. It's below that moving average. It's another low volatility. It's continuation down until you get your capitulation volume. You get your capitulation volume now. You're thinking the next time we go extreme low volatility, we might be bullish. And you're absolutely just crossing your moving average at the same point as that happens. Wow, that's a buy. Nice. Now you're below your moving average and you're going extreme low and you're back into a echo cycle mini bear after a mini bull. It's actually just a rally for the alts, to be honest. It's a small bull. And you should have shorted there as well. How much of your volatility analysis have you done? This is what you get here. This is what we're giving a small look at and sharing as a skill set. And, guys like that, I'm just going to chuck out because they have no idea even of the value of that which is being put in front of them. I'm done casting pearl before swine. I don't need to, I really don't need to listen to people that haven't even thought about their comments. And it's just a reminder of the lowest common denominator, how low it truly is. Think first because before you take a shit on somebody else's head. That's just an idea. Anyway, so at my belligerent best, you're at the top of the channel and you've sold off. You can bull creep till we get squeezed in that channel and we could still have a sell down and retest here. Or things go a little bit faster than we think, and you make the inverted head and shoulders target, which is roughly there. Let's drop it down a little bit. Let's go back into the 3-dayer. And there's certain things I will and I won't be able to tell you. I am investment long. I'm not trading long because the patterns for now, I'm expecting over time the bullishness to start to dominate. But there is a concern that there might just be a little bit more up and down. It's not going to be straightforward. The other thing about this bull move that we are anticipating will come or might have started, we may have the low for, is that it's not going to be as extreme as the echo bull, and it's going to be significantly less extreme than the 2017, 15, 16, 17 bull, which was a 2.5 year double extreme volatility, low volatility to extreme high double volatility super cycle. The next time that you have a chance of that happening again is, I think, later on in the half of this year, maybe even it could be the first half of 21. I think it's coming. It depends how quickly we inch our way up. So where's that top when it comes likely to be for me? Well, I'll keep sharing this scenario. For those that are courteous and respectful, I think it will be in and around the 10.5. I think we want to take out what we funnel drew here in this bear market, 10.5. And if you're extremely lucky, you might even get close to 12 and just die just before 12. So I'm thinking That's where we end up. And then there will be, again, a slight easing. And this will be the sleepiest period that I've referred to before. It'll be even slower coming off than this coming off. There were still some spill moments and some spike moments. This is going to be sleepiness personified. And it depends how long it takes and how little it does. That's my take. It'll be a boring down leg. But this is the target. X marks the box for me. I'd like to see it take out that red line that I've drawn there. That's at the 10.5. So I'm going for a 10.5 run and up to 12. The extremity of the not quite 14 was really, really high. And I think there will be resistance selling up top here with the pen. Let's go with the red or the pretty in pink. I think there will be some resistance selling that showed up quite strongly here. I think you'll start to be, as I say, my hot spot, super hot spot, if I was to tighten that box up a bit, would be 10.5 to 11K with maybe a wick up to 11.5. That's it. And once we clearly get going, it still could be a bit more like that. But it'll be not too hectic. How do we get wrong and how do we reframe our view on this? Well, there's a possibility that low gets tested and it's either a double bottom there and then we get going. So that's a deeper dip. That could happen. It depends a little bit to how we react to the shooting star that we've just had that went all the way to the channel. It doesn't seem to be too volatile and aggressive reacting. So it could moderately calm down and not have too aggressive a pullback. So it could do something like that. It looks more chilled. Normally when I see a shooting wick of that length, I expect quite a significant sell-off. But the follow-through so far today, relatively relaxed. So we might hang on to a little bit of these gains and just maybe call back to this red line at some point and then start moving that process. But you can't rule out a deeper dip and this grind line breaking. In some ways, I'd feel more relaxed if the grind line broke and then it ran it. It's a minor threat out there. I'd also feel more relaxed if we got a bit of capitulation volume associated with it. I'd also feel more relaxed if the Bollinger Band, which you won't be able to see because I just showed you a static picture of that. I do that analysis with my premium guys. Has pinched a little bit more and we've got a little bit of a volatility tightening, and that means you've tested a little bit to the upside, you drift off a little bit and test a little bit to the downside and calmly move gradually upwards, and that's where we're at. Okay, forgive me for my tone. Most people are very courteous and appreciative. I don't run ads on this channel. I'm sorry if these videos are too long for you. You might learn something. If you want a quick 5 bullets and just to be told what to think without picking anything up, maybe there's better channels for you. We are down in the links below if you want to mastery. And here's my take. There will be a 7-digit event for the person who knows how to play what's coming. And my goal is to try to deliver that to my premium guys in the most efficient way, that they are leveraged at the right time, their investment at the right time, and they super leveraged at a key moment that could in fact quantum leap their wealth gains. That's what I'm looking to do. And occasionally I'm giving a few snapshots into that thinking to people for free view. Because some people will say, wow, thank you. And if they manage to execute on their own, okay, they'll be delighted to join our community at a later point. But it's not a requirement. You do whatever you want with your money if you make it from this channel. And if we happen to be right, I could indeed even turn out inaccurate. And I still don't rule out, it has moderate chance of running this low. I just don't think we are going to visit, on balance of probabilities, this lower trailing edge of the channel again. So I think we stand on here, and I'm feeling already the volatility coming out. But a lot of people who know basic technical analysis will still tell you that you got some form of rising wedge structure that justifies a pop out the top there, a little bit more, and you could get some form of a dip, which will just catch those that think it's a trading market. You can start nibbling along the lows at an investment level. That's my position on this. But we haven't got super confidence yet for the trading. That target, by the way, on the inverted head and shoulders is exchange specific, and is also on a very conservative neckline. We've also done one at 7.6, which has a slightly higher target. So if that gets made, it'll be a nice move, and I would then argue that that is indeed, note how it was the axis of 6.448 is the axis of our legacy bear call that we made back there. Key levels of significance, something you'll learn again in the course if you want mastery, if you want to be a lifestyle trader, and you value the kind of things we value. So there you go. Here's a 40-minute YouTube clip for those to watch 2 minutes thereof. Bye for now, and I'll catch you another time.